Welcome traders to the Elliott Wave Street weekly update. I'm Juan Maldonado and today we are going to check the Euro, the Euroyen and the S&P with the actual setups that we are following. So let's start. Alright traders, here we have the Euro. Last week we were looking for price to drop under this area, and if the price was able to drop and then reject, we will have a buy trade somewhere here, something that didn't happen because the price was able to break it down the area and never return, starting a new accumulation cycle at this area. One of the key things when you are finding the end of any cycle is the process of the accumulation. After a big drop is the concept of never try to catch the falling knife. If the price is moving down, there is no reason to try to buy it. But when the price stops trending and starts building the accumulation cycle is where we can start planning the trade. That's extremely important, this concept, because always, and no matter if you are scalping or if you are day trading, always wait for that sideways pattern. If you want to sell because you believe that the price is going to continue lower, sell it at the highs. If you believe that's the end of the trend, buy it at the lows. So that's the exercise we are going to apply here on the Euro. So last week on the Elliott Wave Street membership, we went long for the first time at this rejection. The price was moving down, it stopped trending down, and it started this corrective leg. So that day, we plan a day trade back to the previous low. The price was able to hit the low, and at the rejection, we started the bullish move. So when we started the bullish move, with the bullish trade, better, right here at this rejection, we leave a protective stop loss under the low, some points under the low. In this case, this setup, this price hit our stop loss last week. Okay, and that's fine. It's part of the accumulation process. So the next step after that was buying again. So we jump into the trade again at the 107.07. So we went long again for this swing trade because we knew with a high probability that the big guy was doing or was starting to build the accumulation process. So first attempt and second attempt. And we still have the trade active. The price already reached the 1-to-1 risk-reward ratio. The entry point was at the 107.07, right here, and this area. And the protective stop loss 30 points below, so it was at the 106.77. This is the risk. And once the price reached the 107.37, during this candle, we got the 1-to-1 risk-reward trade. When we reach the 1-to-1 in a trade, we need to book partial profits. So I take out usually 50% out of my trade at the 1-to-1, and then I wait with the other half. The benefit of booking partial profits is that once we reach the 1-to-1, no matter what, we already have a safe trade. And if we let the price run after that and we have the wave 3 that we're expecting to the upside and we have a major leg up, we can make some good money. Now, in terms of the cycle, once we have the completion of the first leg of wave 1, because clearly the price is turning around, we can see low, lower low, lower low, lower low. Oops, where is the lower low? It's not here. So we are seeing higher low. And that's the transition of the trend. This is part of the Elliott Wave narrative. Now let's have a look at the other side of the trend. We have this low, we have this low, and we have this one here. So we start seeing that is building a transition as well on the upper side. Those are hints. Of course, we can't wait for all these validations to happen. We need to trigger faster. That's why our entry point was here last week. So the next step in the process, traders, is the completion of our first impulse, which is the wave 1. So the price was trending down, and then we look for a 5-wave sequence. 1, 2, 3, 4, 5, and after that the ABC for the wave 2, so 1 and 2. And once we have the completion of wave 1 and wave 2, we have permission to start buying, because it's the confirmation that we have the transition of the trend. After our first wave 1, that will be the wave 1 right here, we're going to look for this second wave. Let's have a look how is likely to show the price this week, the second wave. So once we have the completion of 1, 2, 3, 4, 5, the next step is the ABC, is the test. Once the second wave is done, we're going to buy it. We're going to buy the rejection. And at that rejection, we're going to start looking for the bullish move, for the big wave 3 after that. That's going to be the plan. So right here, we already have a trade from this low. The next step is to wait for the test and add to that position that we started here. That's it, right? Keeping things extra simple. Let's have a look at another exercise, which is on the Euroyen. On the Euroyen last week, we did a fantastic setup after the end of this second wave. In the membership, if you sign up, you will get access to all the videos from before, from years ago, and of course, including last week. And right here, we did a great exercise with volume profile and the auction process related to the Elliott Wave theory. It's a great approach for finding the end of a wave. So after the wave 1 and the wave 2, we got the change of trend right there. And that was a signal to sell it. The minimum target, the previous low. Now this week, we're going to repeat the process. So I'm looking for the completion of our second wave. ABC, this is one of our favorites in the membership for the week. And after the completion of the second wave, we are looking for another sell trade back to the previous low at least, probably to the 156 area or so. So let's get ready for this interesting trade as well for this week. And let's have a look at the S&P. On the S&P, we have been finding the end of the second wave. We have been looking for the completion of this corrective leg in order to start the transition again to the upside. So the S&P has been working nicely. We got the reversal last week. We have been following the bullish trend. The minimum target is going to be the previous high on the S&P. The 5-wave sequence is under progress. If we check the bigger picture, the weekly chart, if you have been following our analysis, we started to validate the end of the wave 4. We validated the end of the second wave, and in this area, before the breakout for wave 3, and you can watch the videos here on the YouTube channel, the plan was buying the S&P. So we were able to capture the whole wave 3 before it happened, thanks to the Elliott Wave theory, thanks to understanding the institutional cycles, price action, and the auction process, because Elliott Wave is a fantastic tool. However, we need to add a little bit more around this concept to have higher probability setups. Now, as you can see, we are in the wave 4, or we already finished that wave 4, and we are starting the last leg up for this impulse. Probably we're going to take out the high, the previous high during this leg. So that's why on lower time frames, finding the end of that second wave last week was extremely important. The next step in the process is testing the impulse. And once the impulse is completely tested here, we can start looking for the buy trade at the rejection. So entry here at this rejection, or this one that is coming. And in the meantime, if we are day trading, if we are scalping, this is going to help us a lot, this bias, because all we can do on lower time frames is buying. If we are day trading, looking for the discount and following the trend. Same here, looking for the discount and following the trend. So if you like to trade against the trend, you will be selling on the highs. And if you like to follow the trend, you will be buying the lows. Of course, you need a special training that you can get in the membership, in the Elliott Wave Street membership, to understand how and when to trigger the trade. All right, traders, that's the plan for this week. Don't forget to subscribe here to the YouTube channel. And also, you can get access to the whole educational library, plus the live market analysis in the Elliott Wave Street membership. So we have a fantastic membership for Forex traders, or stock traders, or futures traders. Or the full access here, you can have the list of instruments that we cover on each membership. And also you will get access to the educational course with the Elliott Wave crash course, with the volume profile course, and more. So we have this special, just $19 the first month, and then $75 per month. So you can pick your plan and you will get immediate access to this fantastic Elliott Wave membership. Also, we have a community where you can share your thoughts with other members, and where you can get support when you are facing bad times in your trading. You can be part of our community of traders. All right, so I'll see you inside the membership. Please have a fantastic start of your trading week. I'll see you soon. Take care. Bye-bye.